A very good morning to all and a very warm welcome for today's webinar. So on behalf of NISM, I would like to take this opportunity to welcome you all for the today's webinar on investing in secondary markets. Myself, Amir Sayed, working with NISM. Along with me, today we have a renowned speaker from the industry who will be taking a webinar today. We have Mr. Vinod Tantri, founder of Knowledgeable Academy, Bangalore. So before we begin, just give me some quick introduction. Let me give introduction about the speaker. Under Vinod Tantri's leadership, Knowledgeable has exhibited remarkable achievements. Knowledgeable is a registered training partner with NSE Academy, SEBI, NISM, and banks and mutual fund companies, where the team has conducted over 1,700 investor awareness programs and more than 250 workshops across the country. Mr. Vinod was also a resource person for financial education and investment awareness project, a joint initiative of NSA Academy and Karnataka State Higher Education Council. Mr. Vinod's firm's Knowledge Well is been awarded as the best startup in MSME and Startup Conclave at 2024. Vinod Tantri holds an MBA degree in marketing and is a certified chartered wealth manager from American Academy of Financial Management. He holds 23 years of experience in investment industry. Prior to his current venture, he served with organizations like DBS Bank, Access Asset Management, SBI Mutual Fund, and Prudential's ICICI AMC. Now, let me quickly give you a glimpse what are the major topics or the areas we'll be going to cover today. As the secondary markets plays a critical role in the financial ecosystem. So, which will provide a liquidity, price discovery, and opportunity for both institutional as well as retail investors. In this session, we will be going to explore the basics of secondary markets, how they differ from the primary markets, and the strategies and the risk involved in the investing in these markets. We will be taking all the questions at the end of the webinar. So requesting all the participants to put their questions in the Q&A board. Our speaker will be happy to answer you all the queries. So without taking any further time, I would like to hand over the webinar to our resource person for the today's webinar. Over to you, sir.
Yeah, thank you very much, Ms. Sayed. Thank you for introduction. And I would like to thank NISM for giving me this opportunity and hope I am very loud and clear.
Yes, sir.
Yeah, super. So just before we go ahead, nice to see all of you on this day. And I am from Bangalore, and Bangalore is almost nearing to become a Chirapunji today from last 3 days. Nice. So quickly, I will ask you to, for 1 minute, can you just type your location? I would love to know which part of the country you are from quickly. And as I'll keep on talking, just type where are you from so that fantastic. Bangalore, Jupta. Okay, nice, 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 nice. Punjab, Karnataka, Indore, Bhubaneswar, Chennai, New Delhi, Jamshedpur. Wow. So is entire India here? Super, 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 super. So awesome, 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 awesome. Great, great. That's the energy that I love, because I always believed that the speaker's energy comes from the people who are sitting over there and listening to us. Great. So as Syed informed, I have been into this for investing into what do you say, investment industry for a long time. And last 10 years, I am into the in training portion. We also have trained over 1,200. We have created 1,200 mutual fund distributors, and we help these people to start their own journey as an entrepreneur also. So before we go ahead, I would like to set the expectations right. Today, we are going to talk about secondary market investing. And because it's a SEBI regulated session, even though some of the questions that you may come up asking about specific stocks and all, which will not be answered as per the regulatory point of view. So we are not going to talk about trading. We are going to talk about secondary market, primary market, what is the difference. And we would be giving, I would be giving, I would be giving some examples of maybe some stocks. I may take some names, but the idea of taking some names is purely for education point of view and not any recommendations or any of the buying ideas. Okay, so with this, I would love to start. And yeah, I'm just sharing the screen. I will be sharing the screen on, off, all that. So need your nice. Okay, super. Now, introduction to secondary market, we'll speak about it. Difference in primary secondary market. Participants in the secondary market and instruments in the secondary market, functions and utilities, due diligences, do's and don'ts. So one major thing that you will take away from this particular session in next 35-40 minutes is I may be sharing some tools for you for a investing point of view. How would you study some of the aspects of investment and secondary market that I would be giving you some idea. And there are a lot of tools available, but many of us, we don't utilize it properly. So that's what we are going to learn from today. So I am sure in the previous sessions, if you have attended, we spoke about primary market. And this year, as per my knowledge, there are more than 160 plus IPOs which are being already ready in next to 12 months. Okay, that's the information which we had. So primary market may, when a company want to issue shares, okay, for the first time, I'm just doing this. Okay, when the company want to issue shares for the first time, it issues to the investors. Okay, so what happens is you are directly buying shares from the company here. That is the major activity that happens in the primary market. Okay, so I am sure that you have participated in some of the IPOs that has happened. So you buy shares directly from the company. Okay, it is directly from the company you will be buying. So that is called as primary market. That is called as primary market. And today's topic for us is on secondary market. So what happens in secondary market? In secondary market, basically the issuer, after the IPO, initial public offer, the shares gets listed in the stock exchanges. Okay, so it gets listed in the stock exchange and the investor buys the stocks from the exchange. Okay, from the exchange, majorly from the exchange. That means if I am an investor and I bought a stock from secondary market, when I am buying, if there is a buyer, that means somebody is selling it. So somebody who is selling it, he sells it to the exchange. And through exchange, I will buy. That means I am, of course, buying from the seller, but I am buying through the exchange, and the exchange becomes a major platform for me to buy and sell the stocks. So one major difference between primary market and secondary market is that the investor buys the shares from the issuer. Okay, so I'm just setting the ground for the next thing. So in the secondary market, we buy the stocks, of course, from the investor, but through the exchange, we would buy the stocks. Okay, so this is about just secondary market. But now what we need to know is what is the major other differences. Okay, what are the major other differences of so primary versus secondary market. So definition, securities are issued for the first time to public in primary market. Secondary market trading of already issued securities happens as also as a new market. It is a new issue market. It is also called as a new issue market. And the secondary market is also called as a post issue market. Of course, on technical terms, we use these words, but generally it is not. So prices are determined by issuer company in the primary market. Now, who decides the price in the secondary market? Okay. Who decides the price in the secondary market? Can somebody type in the chat box? Who decides the price in the secondary market? So prices are decided, yes, exactly, demand and supply. Okay, prices are determined by demand and supply. But prices are not only determined by demand and supply, yes, on a day-to-day basis, but also because of the growth story, the buyers will be keep on increasing about things. So pricing happens like that. Key intermediaries are merchant banks, R&T agents, and depositories. So merchant bankers play a major role when it comes to primary market. They are the people who actually design the IPO. They fix the prices based on, and they fix the premiums for the market for the particular stock. Okay, based on the various researches. So RTA, registrar and transfer agents plays a major role. Depositories plays a major role in the primary market. Whereas when it comes to secondary market, stock exchanges and stock brokers play a major roles. Okay. Um, Stock exchanges, it can be NSE, BSE stock exchanges. They play a major role. Stock brokers play a major role, okay, in the secondary market. Clearing members, depository participants, okay, these are all the members or the participants in the secondary market. Now, so the primary idea of primary market is to raise capital for expansion, diversification. Now, I want to know what can be the reason for primary market in IPO, the fundraising, what can be the reasons for the companies? So one, it is clearly told or say mentioned in the PPT, that is expansion and diversification. So, but I would like to post a question that what are the other purpose, objective of raising price stocks in the primary market by the issuer? What could be the reason? So generally it is assumed most distribution channel for clearing the debt. Exactly, exactly, Shivkumarji. So we think every IPO is for expansion and diversification, but you need to be careful about it that there are many companies who come with the, you should be aware about that, that the companies come with the idea of clearing their past debts. Okay. So that is one thing that you need to be aware of. So existing debts, it is not always for expansion. It is not always for diversification. There are cases where the companies have come for a debt clearing. There are cases where the companies come for buying their smaller competitors. Okay, so takeovers purposes. Of course, expansion also matters. Okay. Liquidity, working capital requirement also is some of the reasons why the primary market, in primary market, companies come up and uh, collect funds. But in the secondary market, we need to be aware that the trading of securities, thereby providing liquidity to the investors, companies will not get the money. Companies will not get the money. Existing investors will be able to exit from the investments. When there is a buying, selling happens, when the selling happens from the other side, the buyer gets an opportunity to buy, and he also gets a platform through the exchange to sell. So, but what is the advantage for issuer in the secondary market? What is the advantage for an issuer in a secondary market if the prices go up? Is that his holding price, that is, he might be holding say 20%, 30%, or 60% of the total shares. So that pricing also goes up, his valuation goes up. So that is one important thing that we need to keep in mind. So this is about the primary versus secondary market difference that we need to know. So primary market, majorly we buy directly from the issuer. Secondary market, we buy from the seller through the exchange. okay, from the seller through the exchange. Now, but why do we need this stock exchange? Okay, why do we need a secondary market? Okay, there are so many functions and utilities why we need to understand this. And it is important for people like you and me and the generation now to understand it is not about only investing and making money out of it. There are a lot of other functionalities that comes into picture. Just give me. So it says that uh, secondary market is economic barometer. Okay, economic barometer, or I would say economic parameter. So how would you say that? I've just changed the slide. So how would you change the mode? It is on the camera mode. So how would you say that it is economic barometer? Okay, it is basically because it is assumed that if the two indexes of the country, that is Sensex and Nifty, if it is going upwards for a longer period of time, not on a day-to-day basis, for a longer period of time, it is moving upwards, it is assumed, or it is that the economy is doing better. For that country's economy is doing better. Yes. So growth of the economy. Exactly. Okay. So that is why it is called as a uh, economic barometer. Going back to the slide. Okay. It is why it is called as barometer. So, but the second thing is very much interesting. Efficient pricing of securities. Okay. That is most important today. It is, see how farmers are struggling today because they don't get an efficient price for their product. Similarly, we should be thankful to the country that we are getting efficient pricing to this of the securities based on the demand and supply. And if I want to buy, say XYZ share, okay, if I want to buy one share or somebody wants to buy 50 shares, uh, the share price is same. Okay, just because there is no wholesale and retail, of course it is there, but it's in a different level. But on a retail perspective, efficient pricing of securities happens. So safety of transactions, we are talking about safety of transactions here, safety of transactions. Okay, we are talking about safety of transaction. Transaction means what? Transaction means assume that I have promised you to buy tomorrow, say 1,000 shares of XYZ bank. Okay. And tomorrow, when I actually, the deal is supposed to happen, I exit from the deal or मैं मुकर जाता हूँ deal से. So then it is called as transaction is not safe. Or I take the delivery, but I don't do the payment. So such a transaction. So the secondary market gives us that safety of transaction. That is why functionality of transaction. And the most important thing which I love is contributes to the economic growth. Can anybody please, just in few words in the group only, if you can mention the words, why do you think that secondary market contributes to the economic growth? How does it really contributes to the economic growth? And that is why today even government, even SEBI, even the major thing, they are talking about investing and talking about equity markets. Yes. So increment in growth market shows growth in economy. Yes. It makes possible FDI. Okay, great. Foreign direct investments will come into the country. Great. Taxes will be earned. Great. Possible liquidity, provides liquidity, funds issue with the nation building, company gets more money for infuse. Yes, company gets money to infuse. And this money which is coming in, say the companies have two options. One, they can take loan or they can issue shares. The advantage with issuing shares is that there is no EMI. Okay, there is no interest payment. It is becoming ownership. Basically, it's an ownership. So companies are getting that owners being coming into India. Uh, coming into their company. Movement of cash flow, great. It reflects PPPS. FII, participants, cash flow into economy, participants, a normal public flow money, greater income, and hence contributes to the national income, capital income. Okay, great, super. So yes, something secondary market. Last, I will read this: liquidity allowing investors to buy, sell. Super. But the important part is, yes, you all are right. One step below, if I go, uh, one, the companies get funds and they would go for an expansion, they would go for acquisition, they would go for acquiring new companies and all these things, and they will also go for research and development. So basically, what happens is it is like a cycle. One company gets money, they invest in the infrastructure or in technology or in whatever it is. There is an employment which is also created parallelly along with the direct benefits of the economic growth. The employment is getting created. When employment getting created, uh, uh, there is families like you and me who get paid by these companies, and in turn, what I will do, I will in turn spend. I will go and buy a two-wheeler. I will go and buy a car. I will go and buy a refrigerator. I will go and go for a travel. I will go for investments. So the money gets rotated. That's how the economic growth happens. So for me, I would believe that it is, what do you say? It is also Desh Bhakti when you actually invest into the economy or into the markets of the country. Okay, that is one way of doing a kind of a nationalism, okay, where you actually invest into the market. Okay, spreading equity cult, which is ownership within the companies, that is most important. Equity cult is required. And as somebody mentioned, foreign direct investments, FII has been investing in India, and the returns that they make is mind-boggling from last compounding. If I take last 20-30 years, it's amazing. And unfortunately, we as people are uh, only 5% of the people are investing into markets. Okay, but we are more of 4 times, 5 times money gets into fixed deposit. So, of course, now there is a lot of awareness happening, and people are coming back to the uh, trying their uh, luck in the investment industry. Okay, that's a fantastic news for the country. Promoters healthy speculations promotes healthy speculation because there is first two thing, that is efficient pricing and the safety of transactions help to promote healthy speculation, improves liquidity. So one is investing, second is trading. These are two different part. Why trading is allowed? Because it gives a lot of liquidity in the market. Because I may be investing, I would have bought the shares 10 years back, but today I want to sell it. And if everybody becomes an investor, then there is no scope for liquidity, or the liquidity comes down. So that is the thing. Efficient capital allocation, as somebody mentioned, all of you mentioned about this capital allocation to the companies, encourages savings and investments. Okay, amazed to say that today a small investment concept called as SIP has crossed 26, 24, 25, 26,000 crores per month, and which is giving huge support to the Indian stock market. And so secondary market supports. Now, who are the participants? Who are the people, or say institutions participate in the secondary market? Who are the participants in the secondary market? I am really loving the energy within the room. Due to employment opportunity, standard of living will increase. Exactly, Rohila. Due to consumption behavior will change. Yes, exactly. Okay, purchasing power increases. Sir, your voice is not working. So is it fine now? My voice is clear? Yes. Okay. Yes. Regulators and markets. Great. Now, so who are the participants? I was asking that question. Voice is perfectly okay. Regulators and market makers. Okay. Brokers. Okay. Okay. Investors. Yeah. So one, there are retail investors like you and me. Then there are institutional investors like mutual funds. There are insurance companies. There are pension schemes. Then you have NPSs who invest into this. There are stockbrokers who are participants into this. Okay, so that we need to NBFCs, banks invest into secondary market also. Okay, so these are the participants. But why do we really invest into? That's a great thing that all this is there. But the primary reason for investing into equity market, into the secondary market, is basically the as an asset class, it has generated a fantastic return. Okay. So this one slide talks about if I would have invested 1 lakh rupees per year for 30 years, what would have been the returns in the uh, investment world. So in investment world, if we take insurance, which gives 5.5 to 6%, of course, insurance is not an investment product, but unfortunately, we take it as an investment product. So 1 lakh insurance would have become 6%, may 79 lakh rupees. Okay, invested per year for 30 years. Fixed deposits, 7.2% average rate, 98 lakh rupees. Inflation, okay, महंगाई का दर is 8%. If I take it, would have been 1.1 crore. Gold, which is a favorite of most of us, is 1.36 crores. And equity market at a rate of 15.5 or 16%. This data is slightly old, but it is 5.30 crores. Okay, so this is one of the important reason why investors should today look for an investment, a portion of investment, and diversify this into equity direct, that is secondary market investing through. Now the investing can happen through any of the participants, like you can directly go and invest in stock market, you can come through mutual funds, you can go through some of the PMSs, AIFs, or through some of the unit linked plans or any of the instruments. But the returns go like this. Okay, that is one reason why investors today are looking at, yeah, what mutual funds also I mentioned, Shreya. So banks are just discounting our cash flows with present value. Yes. So banks may basically, whether all these asset classes are important, but see, yesterday I was just looking at some chair ka ad. It was an ad of a chair, okay, official chair. I was thinking that on a cot also, on a bed also you can relax. On a chair also you can relax, but both serve different purposes. Correct. Similarly, equity, you should be investing in equity, you should be investing in gold, you should be investing in fixed deposit, but it has different objectives, the timeline, the these things change. So it is not, investors generally look for what is best. It is not about what is best, it is about what you need. That is one thing, what your goals need. I may need all of this, but for what are the goals for which I need equity, what are the goals for which I need fixed deposit, what are the goals for which I need insurance. So those things are very, very critical. And then it comes to, how do I invest into secondary market? What are the due diligence to be done? Now, academically, theoretically, if I see this, if I show you this, it sounds very, very I would say for academically reading out this is very easy, but you would have seen so many advertisements which come says that in 2 minutes you can open a demat account and start trading. So to get into secondary market, you need to have a three-in-one account. That is, you should have a three things. That is, one is demat account, one is trading account, and one is savings bank account. And the advertisement says that it is so easy that you can open in 2 minutes. So becoming a demat account opening is very easy, but investing needs a lot of knowledge. So I always say that invest in yourself before investing in market. And same thing applies for a secondary market. So what are the due diligences? Underlying factors that affects the company's actual business and its future prospects has to be understood. Questions as to be asked: company's revenue growing? Is the company is actually making profit? The company is able to repay its debt or no? Is the company is poised to position to strong enough to compare? All these things are major thing that one need to know. But the question comes, where do we get this? Okay, where do we get this? So there are several tools. I am sure there are experts in this 350 people who would always know that, okay, what are the thing? And I am giving you some of the tools which I know. By the way, these are not recommendations or something. This is, I'm just sharing the thing. I'm just going to my slides. Okay. Now there are some tools. So now we want to know whether the company is growing or not, or can anybody tell me any company name in the WhatsApp group? Don't tell the very large companies. So everybody will say Infosys, Reliance and all. Okay, we'll take IOB or Tega Industries. Okay, we'll take Tega Industries as per your thing, Tega Industries. Now, of course, I'll not be able to, due to shortage of time, I'll not be able to go in detail, but I'm just showing you. These are the tools. The idea of this is to tell you the tools where you get the information. So you need to know some of the ratios like these book values and all. You need to put some time to first read, understand the secondary market. In that, there are companies. So you can see here, stock P is available, book value is available. So now, peer comparison is also available. So you would know that how would we compare? What is the P of this company? What is the market capitalization? Okay, what is the market capitalization? Market capitalization will tell you the size of the company, uh, the share price of the current market price of the company multiplied by number of shares, uh, free float issue shares traded in the market, say 1714 into, suppose, say I'm just giving a number, say 100 shares are issued by the company. That multiplication comes into the market capitalization. So 12,735 crore is the market capitalization of this company. So this tell you the net profit, quarterly profit, all these things you need to do the study. So this is one way of doing. Okay, this is one way of doing things. So I would just, idea of you giving you this is to tell you there are tools like this. You can go through the tools. Then there is also some tools like uh, trend line. Okay, trend line is a one more tool. I hope the screen is shared. Yeah. TRENDLYNE. So you can see, and you will see the targets as per those things. So these are research tools. These are third-party research tools. So which can be used for your analysis. Okay, for your analysis. So there is say, I'm just putting some. So Power Finance Corporation. So as per then, so one thing I'm very clear that these are all probability analysis. These are not certainty analysis. So markets are dynamic. Things change. This is one more tool, Simply Wall Street. You can also go there. You will get some idea. Instead of blindly investing over a period of time, you will get hold on to this. It is not, it is like, I always say this example that it is like training. Give me 1 minute. Stock market is like secondary market also is basically like running a or driving a two-wheeler. Okay, driving a two-wheeler. So when you drive a two-wheeler, we can tell you where is the clutch, where is the gear, where is the accelerator, where is the stand, and how do we do things. But balance is something which you need to learn. Okay, balance is something which you need to learn. So there are so many tools that available. That is one way of doing. But I'm if you are a new investor, okay, you want to participate in the secondary market, there are indirect investments like you can go through. The best thing is mutual funds. You can go through mutual funds and participate in the secondary market, because you need not break your head into all these things. Suppose I am investing only 5,000 rupees or 10,000 rupees a month, so it doesn't really make sense for me to go through all these thing and get into this. So you can participate through mutual funds. Yes, you can participate through. There are companies who would give you the detailed brokers who give you detailed analysis of the company with their recommendations. Okay. One thing you need to keep in mind when it comes to do's and don'ts, I would like to take it forward. So that we need to be mindful of our risk-taking capacity and take it forward. We need to understand what is my risk-taking capacity and what are my goals, and then take it forward based on the goals. So there are approximately 5,500 companies in the Indian stock market. And how do we really, how do indexes or how do SEBI differentiate these companies? So there are indexes like Sensex 30. This data may be slightly old, but some numbers would have changed. But motamoti, these are the numbers, what I would say, the companies which are there in Sensex. Sensex is a list of 30 companies based on the market capitalization. So larger the market capitalization, larger they become, and they get into this list of 30 stocks. And whether there is a possibility of changes in this 30, or this will it remains constant? Yeah, so these are the things which this thing. So we are whether the large cap, mid cap, or small cap companies. So this is Nifty 50 stocks. Okay, you can see the financial services are the major. Okay, Nifty 100, and this overall the entire the listed companies are divided into three segments. One is large cap, mid cap, and small cap. Okay, so based on market capitalization, first 100 companies become the large cap, and 101 to 250 becomes mid cap, and 250 and below becomes the small cap. Okay. Now, this is based on the fundamental thing. Now, secondary market also uses technical analysis as a chart basis. Okay. Again, there are technical tools which are used. Charting is being used for using this thing. So, 1 minute. Let me again take you through the. Just to give me 1 minute. Yes. So when you look at so this is technical analysis. By the way, again, I am not recommending anything, neither giving a market view. So technical analysis basically goes with the charting, and there are different ways. Different investors look into technical analysis. They go by the candlestick patterns. Some say that candlestick patterns doesn't work. Some go with the charting. Some people say that technical analysis doesn't work, but market exists. One thing we need to understand, that market exists because there are two different thought processes. One, there is somebody who want to sell, and one, there is somebody who want to buy. Somebody who says 100 rupees I bought and I'm selling at a 250 rupees, and he's able to sell because somebody says that 250 rupees say above it is going to, the particular stock is going to go up. So these are the things which basically happens in the market. But fundamentally good stock, if the valuations are good, fundamentally good stocks, you should be looking at buying, and the story should be up and run. Of course, other ratios also matter, but you would get, there are multiple parameters, multiple stories. For example, the companies which are emerging now, they don't have any great stories to tell. Okay. I would not like to name, but there are many companies which basically they don't have any past proven 10 years, 20 years record. Say, okay. So the $1 million question is, what are the exact 5 things that I need to look at uh, in buying the stocks? Okay, which is, yes. Okay, just, yes. Okay, so that is what we would be looking at. Just give me 1 minute. This screen sharing stop. Just give me 1 minute. Is the screen visible? Okay, I'm done. Okay. So these are the some of the aspects that one need to seriously consider. Fundamentally good stocks, large cap companies, and your asset allocation matters a lot. That is one important thing that one need to keep in mind, that your asset allocation matters a lot. Okay. Is the screen visible now? Is the PPT visible? Okay. Taking you back to this. Yeah. Thank you. So what are the do's? Check your registration broker. See, first and foremost thing one need to understand before we go to the typical this thing I will complete in next 3-4 minutes. One, please ensure that you are opening demat accounts um, and then investment happens. It is not some dummy things. A lot of cases, as the emerging markets are emerging and a lot of investors are coming in, we see a lot of scams also happening into this. So be very, very careful about whether the bought stocks are really coming into your demat account or not. First of all, invest only through demat accounts. And Okay, investing through demat account is most important. It may sound very, very basic, but we have seen scams where accounts been opened stating high investments and very high returns. And end of the day, the returns also is visible, but it is actually a dummy accounts. You need to be careful about that. Check for a registration of broker and distributor, company distribution, financial product. That's what I mean. Read all the documents carefully, at least the basic thing. Don't go with only broking commission as a parameter. Okay, uh, you need to have a proper guidance there also. Strike off all the blank irrelevant fields. Okay, about the agreement. Don't go give money to the broker's account. There's one thing what I have seen, that आप सब कर लेंगे क्या, हाँ कर लेंगे, आप इस कंपनी के अकाउंट में पैसा डाल दीजिए. All that is a very, very scary thing to happen. Okay, where a broker is taking money into a pool account and he is running on his own. So there are cases where people have invested in this individual's account names, individual account names. That means Mr. X is taking money in his personal account and he is trading or investing and he is giving returns back to the investor. So it is very, very unethical practice that one when you are following. So you need to be careful about it. So do's may, this is what do's are. Don'ts are basically, do not invest with the borrowed money. Major thing which is happening last 4 or 5 years, markets have given you 25-30% return. Now it is very academic to calculate Okay, I am getting money at 9%, and if I can get 20%, 30%, it's fantastic return because 9% में आ रहा है, 30% market देगा. But people have forgotten that there were years where the markets didn't give a great returns, and they gave a negative returns. Okay, उसको याद कभी याद आएगा हमको भी पता नहीं, it may happen immediately, but याद तो आएगा. So there were days where the markets went down and negative, stayed negative, but overall markets have given fantastic return for a long-term investors. So do not expect unrealistic guaranteed returns. Do not be influenced by advertisements, advices, rumors. Okay, go with your client. We do something called as client profiling, which is most important part, where we understand clients' real goals, his risk-taking capacity, and all these things, which is the key for all these things. And start with basics. Important, getting into direct investment is a great idea, but you need to control as a personal finance point of view. You need to have your profiling first and take the basic concepts like insurances. All those things has to be in place before you come into the stock market. Because why I'm telling this is many people come into directly into stock market, and for them stock market is only for trading. They don't even think about secondary market and invest and wait and all those things. Do not invest exploitism. Do not invest any schemes just because incentives, okay, or gifts. Do not be saved by the market sentiments. So be very careful about it. So Toto, if I would like to say, yeah, recession period, is it said that the small cap is more risky compared to larger cap? Is it true? Yes, Adarshi, small caps are extremely volatile, and having said that, it has its own pros and cons because large caps are uh, elephant movements. They move slowly, steadily with a lesser volatility, whereas the small caps can give you extraordinary returns, which has been happening from last so many years. But when it comes to small cap, you have a universe of almost 4,700 kind odd stocks, sorry, 5,000 plus stocks from where the stock picking can happen. Okay, so one need to be really good at this thing. And if you want to directly invest into secondary market and invest and wait, the best way to find out the stocks, be smart, be don't reinvent the wheel. You can go to some of the top portfolios of mutual fund companies and stay invested for long term time, or get into straight away into mutual funds if you are a first time investor. Okay, but you want to really export, these are the things about the secondary market. Risk point of view, yes, large cap stays less volatile. Mid caps are comparatively lesser uh, volatility than the smaller cap, and the small caps are slightly more volatile. Having said that, it doesn't mean that all large caps are not going to correct and think. There are stocks which have exited from the Sensex 30 also. And we were doing an analysis that in last 30 years, Sensex may say 30 may say, currently there are only 7 to 8 stocks which remained in last 30 years. So that means almost 20 stocks have exited from the Sensex. Can blue chip company fall into large cap? Yes, yes, yes. Others blue chip companies can fall into large, mid cap and small cap, and they can exit from the first thing also. There are so many cases. There are companies which it doesn't even exist in the listed. The shit can happen. So, uh, my name is Vinod Tantri. This is my contact number. Of course, please don't call me for any unspecific things. You can mail me to your questions. We help people to start their own mutual fund distribution and investment advisory, investment distribution business. So we have helped 1,200 people to start their own business into this. So this is what we do, and I am very thankful for NISM for giving me this opportunity. And over to, yes. Yeah, hope I am on time. I had taken 5 minutes extra.
No, no, sir. Then any questions we can left out, so we can go for. So
Yeah.
that's I'm there is Q&A
So
board as well.
yeah, so this is ocean market. This is ocean, and I know maybe 1%, and what that 1% I know I have shared. Okay, and
Mhm.
markets cannot be understood.
That's very true. One or two questions we quickly run through.
Yes.
I think Ms. Rivali has asked why uh, everybody should firstly invest in primary market. Why don't they do not enter firstly in the secondary market? Can we directly go to secondary market
Yeah, it is. Why should invest into? Why it cannot get into secondary market? Is that the question?
directly? Yeah, yeah. Firstly, directly secondary market.
Okay, so why? Because if you're not tested, that's what I told you. No, forget about primary market and secondary market. Firstly, if the first time investor, you better taste, start with mutual funds for your core goal-based investment ideas. Um, Primary market, why one should not get into? Because primary markets, we have seen there are cases of burst also. Okay. So in Sanskrit, we say, sorry to say this, but it says that Pratama Chumbanam Danta Vedanam. So it should not happen that you are investing first time and your capital goes half. Okay, because in primary market, the IPOs which come, the general notion, as I mentioned, that com investors think that the company is coming up with an IPO to collect money, and the collected money is only for expansion, but it doesn't happen always. There are technical things like offer for sale happens there, and a fresh issue happens. So there are companies who come up with a completely 100% offer for sale, and there are cases where the stocks fell below the IPO price and it never came up. Okay. So secondary market is a better idea to get into because you have seen the company, you have seen the management is set, and you have seen the performances of these companies. But I would like to give a suggestion that when even in secondary market, invest, create a portfolios, not in one, so that you say that you want to find a gem and you invest everything into one stock. That is not advisable. Um,
Uh,
yeah,
just
certificates
one
will be
Adarsh
one.
has asked difference between angel investors and blue chip companies. We can highlight.
Blue chip
Or
companies are existing companies who have existing track records. Their market capitalization is the top 50 or top 100. So they have established well in the businesses. They have a larger um, market share in the specific area. Say IT might be TCS, Infosys kind of a guys. So companies are they have established themselves. Angel investing and venture, if you're talking about those kind of investments, basically these are uh, they may go 3x, 4x, but there are cases of burst also. So if you are such a large investor, it makes sense. Otherwise, it is not a great idea.
okay. So Sahil wants to ask offer of sale comes under which market?
Which one?
Offer of sale.
Offer for sale. It is
Yeah.
happens in the primary market. So
Okay.
wherein offer for sale may say assume when Sahil started his company, assume Sahil is a MD of this company, I would have bought some shares of Sahil's company. And as Sahil's company decides to go for an IPO after 6, 7 years, I would like to exit. Okay. For some reason, right? Reason may be genuine. Reason may be that I foresee some losses in the company. That's why I'm exiting. So offer for sale happens in such scenarios. Or there might be an agreement that Sahil would have told me that I want you to be in the firm only for 5 years. After 5 years, you should exit. Okay, I would have told that I will exit. So offer for sale may my shares as an investor when I came in, my shares I want to exit, so I am making it available to the public. That's what happens in the offer for sale. That happens in the primary market majorly. Majorly in
Yashvi
primary
was
market.
okay. Yashvi wants to ask, can we invest in option and dealer market? Is it safe?
Uh, Good question. Please take out, before you investing, please take out SEBI's report on derivatives market, on options trading and all, because the report says that 95% of the people have been losing money into the option market.
Okay.
So one need to be really knowing a lot of things and uh, get into those things.
So Vaibhav
And
wants
you
to
are
ask
basically
why.
speculating. Yes.
Okay, sorry for the interruption. Vaibhav wants to ask why don't Indians invest in the stocks in large numbers? We do. Do we have any kind of statistics to prove that?
Okay. That person like myself and Amir and all these institutions should take the responsibility of this answering this question. I always take the responsibility that yes, maybe people like us are not going out much and doing a lot of awareness programs. But I am bit satisfied on this front because we have done around 1,750 investor awareness programs across the country to ask people to invest into this. We are being so there should be an awareness programs happening across and people should attend. Okay, so there is a lack of awareness and we are being becoming spenders, and spending means we make somebody rich, and these are those companies who are getting richer, and investing means in taking that money back. Say when I use a software, basically it may be TCS or Infosys, and Infosys is making money out of it. So investing in Infosys is seeing that growth. So that is most important part, and I am sure that is going to happen. There are a lot of statistics. We are just 18% of the GDP versus the market share. Okay, only
Okay,
5% of the people invest.
sure.
So
So we'll be
we
taking
will see
last
that,
two.
and it is an opportunity. Whoever has asked this question, it is an opportunity. So I am
Right.
seeing the half glass full and half glass empty case. Yes, sir. Please.
So last two questions we'll be quickly taking. Mr. Vishal wants to ask, sir, what is mean by book building in IPO?
Okay, this would take time. I think Vishal, we can connect on this. Uh,
Sure.
yeah. Any short questions?
Any short question? Sir, any recommendation or knowledge regarding trading and investing? Any book recommendation or any website we should refer?
There are so many today. So many today. If you like to go for candlesticks, um, I'm not getting the names, but there is uh, books on the candlesticks if you want to go for technical, fundamental, intelligent investing. Um, you can go for that is called as one of the best book for. So there are so many books on the recommended thing, but you can go through these. Go with the basics. By the time you learn and come back, you will be lost. So better if your idea is to learn, then there are a lot of things that you can go for. Intelligent investor also is one of them.
Right. Such a last question. Can you just give a glimpse about corporate bonds?
So corporate bonds basically as good as any company, corporates issuing fixed deposits, but the risk remains slightly higher because these are issued by the corporates. There will be coupon rate on these. There will be tenure. So same as fixed deposits issued by the companies. Okay. Now, what we need to look at is the credit rating of these companies. Don't just go by the coupon rates. There might be bonds which is giving you 13, 14, 15%. What we need to look at whether it is rated as at least A or AA plus, whether it is super secured rating. Because in the secondary market, if you're investing in stocks, the stocks may give you minus 20% return. Okay. But if the bonds go bust, it is straight away zero. Okay. So, but it is also a good segment if you look at the rating well and you're not getting attracted only by the yields or the coupon rates. It's a good place to be in. Even you have, and the current scenario where the interest rates are expected to cut, government bonds and corporate bonds would be an if interest rate cut happens. So would be a good attractive thing, and you make coupon rate as well as capital gains into that. There are scenarios where we have seen even though coupon rate is only 7, 8, 9%, the yield has given 11, 10, 11, 12% also.
Okay, sir. Thank you so much for your valuable time. So we have completed the webinar along with the Q&A on time itself. So I'll just officially close the session for the today's webinar.
Yeah.
So thank you for attending today. Thank you participant for attending today's webinar on investing in secondary markets.
Yeah.
Special thanks to our speaker. Thank you, Vinod sir, for giving us a time and providing us such a clear, insightful expansion for this complex market segment as well. So
Yes.
actually, you have given all the practical knowledge and how to go ahead with the selection and what are the risk measure we should look for that criteria and how to identify investment opportunity within them that you have clearly put upfront so that we can look for because earlier people used to hesitant to invest in secondary market due to certain fears. But right now we have the clear idea. I hope we must have clear idea. At least I have got that idea. And to our participants, your engagement and thoughtful questions have were instrumental in making successful the webinar successful. So thank you so much for your valuable time. And thank you. We will look forward seeing you in future session as well. Thank you so much, sir. Thank you so much,
Yeah.
all the participants.
Thank you, everyone. Thank you for your time, and
Thank
whatever
you.
justice we could do in this time, we have done it. Thank you very much.
Thank you, sir.
Thank you.